Okay, good morning, everyone. Hope you're well. Happy Tuesday. It's noon here where I am. I'm having trouble keeping to my 11 a.m. Eastern European start time slot. But if you are around the world and feel like joining me for a little bit here on some monetary charts, Bitcoin charts, welcome and thank you for joining. Trump was sworn in yesterday, new leader of the free world, so to speak. Let's see how he does. A lot of executive orders. I didn't see an executive order come in on any sort of Bitcoin or crypto hype or changes to the system to the extent that the president can influence such changes there. But he certainly is making waves as he does with his proclamations, and people get excited. Lots of commentary on his commentary. And as I do, I just want to try to give my 2 cents about how things look like in the real world, regardless of what a president says, regardless of what a dictator even says. And let's see how the money supply moves and how, of course, Bitcoin, the new asset, the out of this world asset from only 15 years young, has just changed the financial world. Not everybody sees it, of course, but it will continue to do so in the future. So what I wanted to do then is just to show, in light of obviously a lot of hype, a lot of news, how does the money supply look? How might it change? Okay. So I will put in here the chart that I showed yesterday. This is what I showed yesterday. Watch the full stream there if you want more on this. This is the United States money supply, total money supply, what they call the broad money supplies, M1, M2, M3, and M0. All right. And then you got the Federal Reserve or the base money supply, the central bank money supply. That's what's in black and gray. Okay. Notice that M0 is in both. It's in a dark color, means the central bank prints it, but it's also a positive number on this chart, which means that the public can own it. The negative numbers, the bank reserves and the vault cash, these are things that are only for banks, only for regulated, licensed, monopolistic banking entities, including Fed repos. But as I said yesterday, these things are slow moving. I don't see Bitcoin changing any of these money supplies. And I don't see a crack up boom happening that you might see in smaller economies where trade, settling, transactions aren't relying on the dollar's strength, the world reserves currency, the dollar strength. Now let's bring in Bitcoin. So I talked a lot about the monetary base yesterday, talked about Bitcoin, but we didn't really bring it in. So in order to do that, we're not going to focus on the broad money supplies. See yesterday's video. We're going to focus on the monetary base. Okay. So the monetary base, it includes not the reverse repo facility of the Federal Reserve. It includes the bank reserves, the vault cash on the negative side, and it includes M0. Okay, that is cash and coin that is outside of bank vaults. That you and I can take out of an ATM, put under our bed, in our wallet, give as a gift, put in a grocery store till. That is M0. Okay, so just the dark area, the dark curve there, the money supply, which, as I said, in the United States' case here is about $5.6 trillion at the moment, 5.6 trillion. Let's look at the base money supply again, but now we're looking at the global supply. Okay, so this is the supply in the fiat world that is most analogous to Bitcoin. I know longtime viewers here, You've seen me talk about this a lot, but nobody creates this in the world. It's unbelievable. No one will give you this curve except for me. So congratulations for listening. Thank you. Always happy for donations as well. You can find my BTC Pay server in the description. And I appreciate any support. I really, really do. Really, really do. Okay, so the curve I just showed you for the United States, these broad money supply curves, ended in September 2024. Very slow moving, very slow with publicizing. The Fed doesn't publish some of this data that I need until the quarter after. So they do it quarterly. So that's why this still goes back to September. Here we have monthly data, but even for most of these money supplies since September, I don't have. So this is actually September month-end data, third quarter 2024 end data. But I roll the amounts forward, but you will still have a dollar exchange rate effect. So that's kind of interesting. So what this is showing you is if we keep this $27.2 trillion, but we keep all the native currencies, euros, yen, yuan, Brazilian real, Indian rupees, pound sterling, we roll it forward based on the dollar rate, this will evolve. So on all those currencies exchange rate, look at that. In 3 months ending, this went from 27 trillion global monetary base value, global central bank money, down to 25.5 trillion. So that is $1.5 trillion right there, just lost value of, that's other currencies losing value against the dollar. Okay, the euro's been losing big against the dollar. Every currency actually has been losing value against the dollar. And that's a big part of actually what's happened here as well. Even they did pull a lot of it back, but a lot of it is dollar loss. Something to keep in mind. Again, when they tell you that the dollar is going to crash, it's the best looking horse in the glue factory. Remember that. So we're at 25.5 trillion. When I finish the fourth quarter update, which will be sometime next month, because usually the data isn't fully available for me to record and work through until the end of January. So it's going to be mid-February by the time you'll see Q4. I suspect this number will be even lower. Okay, because central banks are still trying to compress the balance sheet, even though the Federal Reserve dropped rates a couple times at the end of last year. We saw the Fed funds rate drop. The balance sheet on net is still also dropping, which is unusual. It's unusual, but simply, everything's on the margin here. Everything's on the margin. So wherever they want rates to go, they will buy or sell reserves accordingly as the market will bear. And they've been able to drop the balance sheet, actually, a little bit more. So we'll see. We'll see what happens here in Q4. But I suspect, again, another lower number in the global monetary base. And lower means tighter. Lower means a tighter money supply. And a tighter money supply is something Donald Trump won't like. Donald Trump doesn't control this. This is the world's monetary base. This is the top 50 currencies in the world. Adding additional currencies, by the way, marginally matters. Top 5, are over 80% of the value here. Nonetheless, this is the monetary base, all right? So this is the fiat equivalent of Bitcoin. And it's much more meaningful. It's a much more meaningful comparison to Bitcoin than the broad money. Whether you look at broad money of the United States, which is about a similar dollar value as the global monetary base, but again, totally different idea here. This is broad money. This includes all bank deposits, savings deposits, time deposits, money market funds, repos. This is just base money. These are all the central bank printing presses of the world. When people talk about the printing press, they usually don't show you the printing press. Here is the printing press. All right. It's a big growth rate. The growth rate is 12.7% per year compounded. That's the blended weighted growth rate of the global monetary base. So in this exhibit today, I want to show you the evolution of this versus some other key monetary asset values over the years. The first one, of course, is going to be gold. Okay. So what I'm doing here, I'm going to stack these. I'm going to stack them. But I hasten to say, this is actually not a correct, it's not a fully correct way to analyze this. Okay. Notice here how I have the base money as a negative. This is a more correct way, actually. Let's take off M0, but just the bank reserves, you see they're negative here. This is the base money that's in the banking system, that the banking system holds as a base money asset. It's the asset that backs all of their liabilities. And yes, it's hugely levered. I know this. We talked about the leverage yesterday. But that's how it works, okay? One man's assets is another man's liabilities. The banks, of course, have loans. They make loans. That's the majority of their assets. But as far as the money that's in the banks, it's here, the black negative value. All these green positive values are liabilities for banks, not just banks. Liabilities for hedge funds, pension funds, money market funds in some sense, but money market funds actually hold a net asset value. So that's another can of wax. But basically all the financial intermediaries that work in the financial systems, that's what these green curves are counting up. It's liabilities for the banks. Okay, that's a money supply in the fiat world is a liability. So here, I should actually put gold as a negative. But I'm going to not do that just so you can see how the picture evolves as a percentage. It's just a fact that if we would look at liabilities of central banks, whether it's the Federal Reserve with their monetary base or the Bank of England or PBOC, People's Bank of China, all of these monetary bases follow the same basic accounting rules. They are a liability for the central bank, and the central bank will hold assets that it buys with that printed money. So gold is traditionally one of those assets, but gold is an asset. So you actually don't add up assets and liabilities. I understand that. If you're really deep into the accounting, you'll get this. But still, as a bucket of value, I think it's easier to add them. It's still the core of the system. Doesn't matter that much. There's only about 1/6 of this gold that is actually in central banks. Okay, we'll get to. So then you could even make that more of a nuance that really the gold that's in jewelry, the gold that's in private bullion, that can be added on to the monetary base anyway because it's in the public. So whether it's in the public or in the banks is a big thing about banking. It's a big thing about where money supplies are. Just a little sidebar there. Okay. So nonetheless, I'm adding them both together here just to give you a flavor. You see that back in the day, gold was a huge portion of the monetary base. In fact, it was more. Okay. So we actually see here, interestingly, we see that gold is over collateralized on the system. Now, again, I hasten to say, not all that gold was in central banks at the time. A lot of it was in jewelry. Some of it was in private bullion, not in central banks. This is just the gross brutto number added up where I'm making these comparisons. But we had a lot of gold versus the monetary base. Okay. Then as we add, truth be told, there's more central banks that come here in the 70s and the 80s in the data set, which is fine. It's not a problem. This is not I'm not measuring the compounding that way, so of the growth. It's just visually we can see that the era of fiat money really kicks into gear in the 90s. In the age of globalization, dollar continues to hold its hegemony in the world, its hegemon status, and off to the races. Okay, we get to the global financial crisis. On the eve of it, again, monetary base was only $7 trillion. Gold, 3.3. Okay, 3.3 trillion. All right, so in totality, we can say global basic money is 10. Although, again, there are some asset and liability issues here, but for comparison purposes, it's a small problem to not worry about. Okay, so then we go up more money printing here, more money printing across the world. Try to actually cool it down. Some countries, for example, the dollar, but other countries, for example, the euro, keep printing. Then we get to COVID, even more printing. All right. And of course, this is always, as always, this is Wittgenstein's ruler here. We have the dollar, which I'm displaying the values in this numeraire, the dollar. But there are euros behind here, yen, yuan, pound sterling. And of course, like I said, even here at the end, these are going to be dollar reflexive. The reason that we went down here from September 2024 from 27 trillion fiat monetary base to 25.5 by December is dollar strength, other currency weakness. Gold had a good year, though, as well. So here we see gold flies, right? At the end of 2023, gold was only 11 trillion, 12 trillion in available gold worldwide. Now that number is 15 and a half. Gold had a great year last year. All right, now let's add on silver. There's silver. You can barely see it. It's kind of that deep gray. Maybe I should have changed the color here for this one, but see the silver bars, silver coins, the coins in the tooltip there. The lower one, of course, is silver, less valuable than gold. Interestingly, here is a big spike in silver, went to $50 an ounce, way overvalued at the time. Silver got to about 1/7 of gold value, 1/7 here. Okay, but that didn't hold, falls down, and even though it's up again, we're still, as of this day, actually with the let's do that math on the fly. 1/9 with a big kick, and indeed 1/12, 1/9, 1/16. These were the ratios that silver has traditionally been valued at relative to gold. Sometimes by fiat, sometimes by market, sometimes by natural mining. Okay, the natural mining ratio is also about in this range. Isaac Newton famously put gold to silver at the mint of England at 15 to 1, 15.5 to 1, I believe. Although that does start, of course, bimetallism, because once you peg one money to the other, then you will have what's called Gresham's law. Bad money will drive out good. So pegging one currency to another doesn't necessarily do the trick. So that's gold, silver, and fiat. And if we add these three up, as I'm estimating for year-end 2024, and the gold and silver are not really estimates, by the way, although no one knows the true amount, right? These are just estimates from central banks. Also, I don't have it in the source, but World Gold Council, Silver Institute, so on and so forth. We got 25 trillion in monetary base, 15 trillion in gold, plus another half of each, so that takes you to 41, plus silver, 42, 43 trillion dollars in the global basic money. These are the money supplies that are comparable to Bitcoin. So now that we've done fiat, gold, and silver, let's put in Bitcoin. And I have Bitcoin here, of course, ahead of silver because Bitcoin did pass silver this year. Yet again, you can barely see it. So let's even take off gold and monetary base. Let's just look at Bitcoin versus silver. These are stacked. I'm stacking these values. See that Bitcoin now is at 2 trillion. This is year end 2024. $2 trillion Bitcoin. We know it's a little bit higher now. $1.8 trillion silver. This is available silver, non-industrial silver. Bitcoin passed it in 2021 for the first time. Okay, 2021. Fell back down a little bit, and then, in the bear market, and then is back up again. So Bitcoin is larger than all silver mined throughout time that is available in the market. Here it looks backed out, just silver and Bitcoin. All right, you see the Hunt brothers tried to corner the market in 1980. You see this major spike. Silver goes to $50 an ounce, way overvalued now. And now it's up again. Silver spiking. But these are stacked now, so we put them all back together. Gold, monetary base. Let's just reflect on this for a second. How huge are these numbers? Okay. I don't mean to throw cold water on people's Bitcoin parties. Bitcoin is still a fleet. All right. I know fiat currencies every day become more worthless, less valuable. The oxymoron of that statement that it is. I know that. I know that gold generally goes up in value. Generally, not always though. It can go sideways for sure for a decade. And silver, the same. But Bitcoin, with the unique characteristics that it has, being transportable around the world instantaneously, anywhere, fully sovereign, holding the keys. No one can control this base money but you. All right, if you use Bitcoin correctly, run your own node. Bitcoin is just the penetration into these buckets of value is incredible. All right, so I'll try to show that. Now. What you see here is the Bitcoin percentage of all the money in this chart. Okay, so it's just incredible. If we look back, obviously these are eras of gold and silver. Bitcoin, we see the first time it really moves here, the 2013 spike, gets up to 0.1% of all base money. Okay, falls back down, very volatile, very crazy. Then we see it get up higher, almost 1% in 2017, fall back down, back to 0.1, 0.2%. Struggle again. Then we got the 2021 booms, gets up to 3%. The total value of base money, fall back down, under 1%. Now, where we are right now, December 2024, and this could even be a little bit higher once I revise the 2024 numbers for the monetary base. Like I said, 4.4%. All right, $2 trillion Bitcoin against $44 trillion in base money. An incredible achievement. Satoshi Nakamoto will win the Nobel Prize one of these years. The proof is in the pudding. Absolute incredible achievement that in 15 years, Bitcoin is about 5% of the world's basic money. These are the money supplies that are completely analogous to Bitcoin. Fiat money, gold value, silver value. I want to do a percentage now of gold, percentage of the total, just to see where that is. Okay, these are not stacked on the right-hand axis. They're just raw percentages. So I'm going to put that's going to be in green, a green line here. This is gold. Sorry, not a green line, a green percentage. Here's gold. Okay, so gold is a huge percentage, right? Got up to 66%. This includes the silver value. Remember, this is a percent of the total, not just the monetary base. So gold got up to 66% in 1980 when it was screaming high at $850 an ounce for about 2 seconds. Falls back down, 20-year bear. 2000 turns it around. But notice it was extremely low relative to the total. 25, not extremely low, but all-time lows. Only 25% of the bucket until about 2018. Finally, when the price started to turn around, even with the COVID money print, we're trending back up for gold above that quarter of the basket value. Okay, so gold is now 34.7%. 34.7%. That is pretty good. Pretty good. It's an interesting, it's an interesting evolution that gold is rising so high. But Bitcoin, remember, is really, really getting there. 4.4%, almost 5%. It was nothing. It was nothing 15 years ago. And what I want to do, let me take the tooltip off just so you can see there. You can see the gold percentage as it changed over the years. I say this often, and I will say it again. If you imagine that you're a gold bug in 1980, gold was $800 an ounce. The dollar had been freely pegged from gold for 10 years. You would have thought that, the world was your oyster if you were a gold bug in 1980. It didn't pan out that way. All right, it was fine to invest in gold, but from 1980 to 2000, you were in a 20-year bear market. It's very hard to be in a market where the price declines relative to other goods every year, and you got to work with that asset and make money. Very hard. That's a 20-year bear market. Flushed a lot of nonsense out of the system. Am I saying that that's going to happen right now for Bitcoin? Absolutely not. Absolutely not. We have the power curve. We have a lot of other evidence. We have the fact that this is again, transportable global base money that has the properties well in excess of fungibility than both fiat and gold and silver. But I do use this with caution. All right, if we were gold bugs in 1981 at some conference, gold had just reached the high, we're waiting for it to come back and reach another high. You never know. You never know. The Federal Reserve had a lot of gold. If you're a GATA fan, and I think there are some good people in GATA. I mean, I don't know much about the organization other than what I read. I don't know anybody there. Some people say they're a bit too conspiratorial, but they have just raw facts and quotes on their website. And Alan Greenspan said in the 90s, central banks stand by ready to sell gold should the price rise. So certainly a managed game against gold globally by central banks. And, we went from 65% of global base money down to 25. So if you're a central banker, you can look at this as a success. You were able to debase money. You were able to print basic money in excess of the value of gold that used to be backing it. Okay. Another word for that is seigniorage, by the way. Seigniorage. So the point is, be careful. I think the world moves a lot faster now. I think that with information and what we expect out of market values, not just in hard money, hard assets, but in stocks as well, we expect things to be a little bit more volatile, to move faster, to change, trends to change quicker. So I'm not at all saying that, Bitcoin, we're in danger, that Bitcoin could see the problems that gold had. First of all, it's not nowhere near that high percentage. But I also want to ask the question then, think about if it did get to that percentage. Think about if Bitcoin did get to 60% of the global monetary base. Or 50%. Bitcoin will be flying high, no doubt, in value. It will be flying very, very high. But what happens after that? What happens the next day? Does the global monetary base evaporate? Do governments stop printing money? Do governments stop trying to manage their sister organization that is the Treasury? Do they stop trying to manage their Treasury's balance sheets by buying and selling bonds of their respective nation? I find that they're very difficult to believe, no matter how much you like a populist like Trump or someone else. By the way, we have Trump and Melania coin to compete with, firstly. We can't forget we're competing against those powerhouse assets here. And no, I'm not going to be adding those to the base money exhibits here. But ask the question, if Bitcoin gets up to 50%, let's take the gold off. All right, it's at 4.4 now. If it gets up to 50% of the total, do you think it's going to go to 100% the next day? Do you think that all those currencies are just going to implode? Do you think that the gold value will implode? History is less clear on these items. Usually, when a country experiences hyperinflation, they have nothing left. They have their military has usually been gutted, or maybe they're trying to run a coup or something, but there's no faith in it. There's no faith in the government or in the currency that usually that money, that base money is spent on to buy more bonds. Usually there's a lot less faith in the currency when you have these hyperinflationary events. And by the way, as Steve Hanke says, even though he's not a fan of Bitcoin, I've interviewed him on the show in the past, you cannot predict hyperinflations. It's impossible to predict. We can lay them all out, lay all the issues out, but you never know. I mean, look at Argentina. They've been running very high inflation for a decade, and then Milei comes in, devalues the currency, cuts public spending, and now you only have a 20% drop on the black market rate of the Argentine peso in the last year. I'm not saying it's perfect at all. I'm not saying that continues. I have no idea. I don't know anybody. I know people in Argentina, but nobody in the government that could tell me if they're going to succeed there or not. The point is, it's murky. You never know what Trump coin's going to do. I say that with all sarcasm intended. There's a lot of noise. A lot of people that tell you they know what's going to happen next. They're going to sell you a newsletter. I will repeat, I'll never do a newsletter. Just please, if you like this value, give me a little sats to keep it up. I appreciate any donations. BTC pay server is in the description. You can also donate on YouTube. I am monetizing. But I'm not going to try to give you the hype. Right? I'm not going to tell you I know what happens next week to the price of oil like some garbage analyst on CNBC, because I don't. But over the long term, if we look at these trends, I would say over the long term, it's safe to say the Bitcoin percentage goes up, the fiat total goes up, the gold percentage goes up, and even the silver percentage goes up. But it should be clear that the Bitcoin percentage is probably going to go up more than all the rest. Not financial advice, but it should be pretty clear. Is it going to go to 50% tomorrow on a Trump executive order? I would say no. Could it happen by the end of the year? Maybe. Let's just do a quick, this is like the most back of the envelope stuff, right? Okay, so from end of 2020, we had 0.5%. We went to 3. All right, what's that multiple? Nearly 3. That's a multiple of 6. Okay, so here, just right now, I have no idea if this is the correct base. We're at 4%. If we go up by a multiple of 6, what is that? 25%. That's half of 50%. So that doesn't seem realistic. I mean, maybe possible. Again, I have no idea. But do you think that it's hyperinflation? Do you think that the whole system is going to collapse under its weight? Everybody's going to lose confidence in everything, and every newsletter you've ever wasted money on, their predictions come true, and it's a collapse of everything, and then Bitcoin wins. The probabilities there are very low, in my opinion, very low. But that is how it looks. You know, look at the evolution. It took a long time. This was when we got off the gold standard. There's a couple $100 billion in these different values. A couple $100 billion. Now, $25.5 trillion for gold. $25.5 trillion for fiat. That's all fiat money. $15.5 for gold. Nearly 2 for silver. Bitcoin over 2, as we know at the moment. 4.4% of the total. Bitcoin is 4.4% of the total. Lots of room to grow. Lots of room to grow. But I would just be cautious about the hype. No matter what you read, doesn't matter. I mean, I hope you can use this, dear viewer, as a liberating tool. All right, stack sats and relax. Don't worry about what some financial guru like Jamie Dimon, who called it a fraud years ago, somewhere in this period, says about Bitcoin. He's just one guy with his hands certainly close to the pulse of the United States financial system, no doubt. But the United States financial system is not the global financial system, and the global financial system has no control over the Bitcoin protocol. But the fact that it is a low percentage can give people comfort, at least, that there's room to go up. Again, the fact, will we go up 6x here, or should I have started my base here, in which case we've already gone up 4x, right? Should I have started my base in August 2023 when we were 1.3% of the total? Now we're 4, so we've gone up 4x. Maybe we can only go up another 2 times more from that base number, right? I don't know. I don't know the answer to that, but I'll show you one more chart here that maybe can give us another flavor of where Bitcoin can go. What is that? That's the supply. Now this is market cap. Just going to show market cap today, not the 21 million coins. Do some other analysis here with that, but Bitcoin used to be a couple hundred million in the early days. All right. June, when it hit $35 per Bitcoin here, 130 million market cap. Now, even this catches, this model caught it when I loaded it today, January 20th, which is yesterday. This is one day back. 2 trillion. This is the market cap I caught. Not the highest. Got 2057. 2.1 I caught on December 17th, 2024. We can run the old power curve. We can run the power curve on here and see how this regression looks. Let's do it. 96% R squared. Incredible R squared. Power curve allows us to project out. Let's go out to the end of the decade. All right. You'll remember that the price projected out to the end of 2030 is something like $600,000 at the moment. 600,000. That's a market cap of 15 trillion. Now, this is actually a different way to triangulate it. I'm not taking the price times supply in this analysis. I'm just running a straight regression on the prior market caps. Keep that in mind. So 15.8 trillion is the market cap regression. Not even going to look at the 1 sigma, 2 sigma moves here, just 15 trillion. All right. Let's take it out a little bit farther to the end of, this would be 3 more halvings from now, even, or from last year, to the end of 2020, to the end of 2033. Okay. Where do we take it now? What's the market cap? 35 trillion. 35 trillion. Again, it could be way up here, way below. But this is the trend line. We're right on trend at the moment. Right on trend for the power curve, which in itself is a rare event. To be right on trend, to sit on the trend line doesn't happen too often. Keep that in mind. Usually we blow through it or back under it. Rarely do we sit on it, which is interesting. Maybe we will sit on it for a while. I don't know. 35 trillion. $35 trillion. Two full halvings from now. 3, if you look, a couple years ago. Three halvings from now, basically. $35 trillion. Let's go back here. That's $35 trillion is still lower than today's monetary base plus gold. Today's monetary base plus gold, 41 trillion. $41 trillion equivalent. Supply and demand. This is just a supply side look at the data. taking Bitcoin out on its very, very strong 96% R squared power curve only gets you to 35 trillion by the end of 2033. I'm not saying I know the future. I'm not saying it's going to be a calm, smooth ride. I think we all don't expect that. But if you do take a deep breath and you look at the major trends of how these things work, they just grow exponentially. This stuff grows exponentially. This, Bitcoin, grows in power. And we have to just see how that growth rate shakes out, see how it will meet. But, none of this is inconsistent with the long-term views that I've had, and I think most professionals have when they think about Bitcoin trying to replace or integrate itself into the global monetary system, which again is not something Bitcoin itself seeks to do. Other people seek to do it on behalf of Bitcoin, which I would caution. Regardless, those that really, I think, look at this stuff seriously, they will tell you as well, it's going to take decades. Right? History tells us it's going to take decades. The only caveat I would say there is if we're in some World War II situation, like a truly shifting of the landscape as World War II did. Remember, most of the world's gold was in Europe before World War II. After World War II, most of the world's gold was in the United States. The United States had something like 80% of the world's monetary gold after World War II, even actually during the first year of World War II. It was a major geopolitical event. World War II is still, to this day, one of the most consequential wars in human history. I don't think Trump wants to be a part of something like that going forward. Certainly talks tough, talks a big game. Doesn't seem like China wants that going forward. Putin also talks a big game, but has, 1/5 of their economy doesn't have a toilet. So it seems that they can't really back up the talk, although Ukrainians suffer every day. It seems like the talk for, real Iran as well, of course, and Russian-backed Syria, Iranian-backed Syria, that whole fell apart in a week during American Thanksgiving, that whole house of cards. It seems like there's a lot more bluster than fact. So, presumably, hopefully, we can have the probabilities fall on peace and not war, and not a major realignment of the geopolitical stars in the world. Might be a world of tough-talking autocrats. I don't know. I don't know what to expect. But something tells me it's not going to be a World War II-like event. And I would knock on wood for that. I certainly don't want it. Imagine most people don't want it. You might want change, but you don't want that kind of change. Certainly don't want that to come to your family. So, again, if we hold these probabilities true, wrong word I should say there. If we keep these probabilities in mind, then we just continue on. Bitcoin will continue its rapid ascendancy to some place on the global monetary throne, which you are looking at right now. You're looking at the total supply of basic money. What percentage that is, no idea. But if you look at just the market cap, how it grows, even by 2033, at the normal power growth rate, the power curve rate, that's 36 trillion by 2 full more halvings from now. 3 halvings. Why do I keep saying 2? 3 full halvings from now. Sorry. Still smaller than gold and fiat money today. So I don't see the rapid changes. I don't see Bitcoin not having a seat at the table, but I also don't see Bitcoin just completely enveloping all value in the world in this manner, even though those of us that stack sats certainly oftentimes view it that way. The old infinity over 21 million meme. If you look at the numbers, if you look at the trends, I see some good things for Bitcoin, but I don't even see 50% of the global monetary base, at least according to this metric, within 10 years. I'll look at some other metrics in the future to try to square this out. But at least according to the market cap growth, it doesn't seem likely. The probabilities seem low. If we make a 2 sigma up move, then it happens. All right, 230 trillion. That could happen. But I'm not sure. So there it is. If anybody has any questions on how this stuff is calculated, what it means, again, these are the most analogous money supplies to Bitcoin. Total silver value, total gold value, total monetary base central bank value. Bitcoin is at a record high as far as a percent accretion of all of them, 4.4%. I certainly think a doubling of that is very possible within the next year. Certainly possible as we're coming into the bull market. But we will see. All right. I'm going to leave it there. Thank you guys for watching. Have a good Tuesday.